Nimesh Shah, Managing Director and Chief Executive Officer of ICICI Prudential AMC, joins us live from Kolkata. Nimesh, good morning and thank you for joining us. The big question is that how should genuine investors approach this market now, because markets are no longer cheap, but there is still an opportunity there.
I believe at any point of time there will be valuations which will be there will be scripts in which investment is always possible. So right now also, while I just heard you that it has been that all through the market is increased and it's not as polarized as it was say 2 months back when we had launched our value series. So while I agree with you that it has increased, it is all round increase, but at the same time there are lots of opportunities available in the market, especially in the mid-cap segment, where one can invest for a period of 2 to 3 years and value is available in the market. So if I were to answer, I believe that markets will continue to be volatile while we are in a very exciting or a new phase where people are getting excited on the streets. But at the end of the day, I believe in the next 2 years, 3 years, if one looks at it, then I am pretty confident that one should go ahead and invest. Markets will remain volatile, and if markets are going to remain volatile, you need funds which will for which volatility itself is a friend. How can you make out money out of volatility? Volatility is, one has to look at that, and we have created a series of funds which gain out of volatility. So volatility is here to stay, and if volatility is here to stay, then how can we make money out of volatility? That is what one is looking at.
Nimesh, if volatility is here to stay, why do you think mid and small cap stocks will do well? Because mid and small cap stocks only outperform when there is stability in a market.
So I would look at it in 2 parts. One is there value available in mid and small caps over a period of 2 to 3 years? Yes, value will be available in mid and cap. I'll explain why. Suppose there are 3-4 opportunities why I believe in the next 2-3 years mid and small cap, where there is value in it and one can make money out of it. One is that as the market was polarized in favor of those 15 scripts which were doing very well, there were lots of companies in the mid caps which were not getting fancy for. When dollar strengthened against the rupee, at that point of time, the technology and pharma took off, but it took off only in the large cap space. Still, there are companies in the mid cap space where there is a lot of value available because people have not gone to the small caps to that extent as they have gone for the large caps. That is point number 1. Point number 2 is that there are industries which have not taken off at all. The whole infrastructure sector, and I know that this sector has not made return in the last 5 to 6 years. But I find this in the next 3 years, if one has to look at it, if you have got a company in the mid-cap infrastructure sector or the large-cap infrastructure sector, and by infrastructure I include capital goods and everything, which has not performed over the last 5 years, then I think there is a opportunity available. If you have got a paradigm of 2 to 3 years, then this is the time to invest in infrastructure sector. That is what the belief. So there are sectors except pharma, technology and FMCG, the other sectors have not done well in the last 5 to 6 years. So if you are a believer of cycles, then these other sectors will do well in the next 3 to 5 years. That is why one should invest in mid-cap, infra, etc. So there are opportunities because of currency. There are opportunities, and there is another. If you see the PE ratios of the last, you might find that the PE ratio has come to over last 10 years average. We are at the same PE ratios as last 10 years average. But if you see the price to book, there is a reduction in the price to book. What you see the price to book today is lower than what has been traditionally the price to book at which the market is quoted. What that indicates that there is a ROE of companies have decreased. On the last 3 years, ROE of companies have gone down. That means there is a capacity, and there are 2 reasons for that. In some companies, the companies have not leveraged and are not expanding and are not growing. So there is an opportunity for them to grow with the same amount of net worth. And there is another reason that there are lots of companies we see where capacities are not fully utilized. Those companies over a period of next 2 to 3 years will utilize those capacities. So without further investments, they will be able to increase their EPS. So that's once their profit increase without increasing their capital, then the EPS growth will be much faster than what we think. So that is why I believe, because of these 3 reasons, there is an opportunity in the market that one should invest for.
What about mid-caps, Nimesh? When would they start playing catch-up? While we've seen the one-off sectoral moves in banks, couple of power ancillaries, etc. already happen, but as a basket, when do you see the thrust coming back to the mid-cap end of the market? Because even yesterday, when the Nifty and the Sensex were at all-time highs, mid-cap somewhat underperformed.
That is where the opportunity is. That's why I've been saying since last 5 minutes about mid-caps, and there are opportunities available in specific companies. I don't know exactly when it will happen. The date I cannot tell you when it will happen, but definitely over the next 2 years. And in fact, if you see we had launched on the same philosophy that I said, we had launched a product called ICICI Prudential Value Series 1. If you see in the last 1 month, we would have finished our investment in that, almost 90% we are invested in that, and the NAV has gone up 3.5% in a month's time. So it is a basket of 30 stocks, right? So on a bunch of 30 stocks, the NAV has gone up in 1 month's time by 3.5%. I'm not saying that it is, but I'm just saying that it will start moving over a period of time. So value was available, value is available, even today.
What's the view, Nimesh, then on metals? Because that as a basket has begun to move. Are there investment bets to be taken in the likes of Tata Steel, for instance, which has been the surprise mover in the pack?
I cannot go into specific scripts, but if you see, we had taken a top-down call on metals 1.5 years back when no other fund had taken a call on metals. We were the only ones who had taken a call on metals. It was more of a dollar call that we had taken on metals, that if dollar does well, metals will be relatively better, and that call for us has paid off to a certain extent in the last 1 year. So we are still overweight metals in our composition of stocks. We are still there.
Nimesh, your funds across the board have done rather well. So my compliments on that performance. Your funds are in the top quartile. Now, you've always followed a very differentiated strategy. You've not bought consumer, you've not bought pharma extensively. But at the current juncture, if your underlying thought is that there is value in infra and it is time to revisit cyclicals, are you playing it too dangerously? Because there is no evidence of revival. Earnings have not bottomed out. And for those who are buying cyclicals, maybe they could be taking not a small but a very, very big leap of faith.
I agree with that. So that there is no underlying nothing has improved. But if you see the last 10 years, if you see the last 20 years, money is made in the market. Data will also show when the GDP growth was the lowest in the market. When IIP numbers were the lowest in the market, if you have invested in the last 10 years when GDP growth was the lowest in the market, when IIP growth was negative, when fiscal deficit was maximum possible, and if you invested in a country like India, which has got an inherent, whatever you say, even 5 to 6% growth, a nominal growth of 12 to 13% over a period of time, if you are a believer of cycles, and if you believe that the cycle has bottomed out, then it is the time to invest when the cycle has bottomed out, and if you wait for the good news to come in, then it would have run up. So we are confident that, yes, I agree with you that one should not. So if one can take that leap of faith on India, not on ICICI Prudential, not on specific scripts, if one can take a leap of faith on India, that India will bounce back, then one has to invest in ICICI Prudential Infrastructure Fund. We are very confident that it will do well over a period of time because India will bounce back. That is but if you see the ground realities as you have put it, that nothing on the ground has changed, nothing on that, then why are you doing this? Then one can also invest in ICICI Prudential Discovery Fund, which is a value fund and which anyway holds 20 to 25% in the capital goods sector. So then you have, but I would play that India will bounce back, and if India has to grow, then infrastructure has to grow. I'll put it that way. And whichever new government comes into power will have to create 5 crore jobs in the next 5 years. Any government that comes into power, it has to create almost 5 crore jobs in the next 5 years. If you need those jobs, then you need growth. And if India cannot grow today without growth in infrastructure, so I believe that growth has to come back, otherwise will not create that kind of jobs. Any political party cannot sustain without creating jobs in this country. So we have had a slow growth in the last 4-5 years in jobs, but next 5 years we have to give jobs to 5 crore Indians as a country. So my faith is coming from that My faith is coming from that infrastructure growth has to revive in this country. There is no option but for the new government, but to announce all those policy measures which will make it happen.